All right, so we have all kinds of reports circling around at this point, 7 as a matter of fact. So I thought I would do a quick module on which ones do you need to review when. They are certainly not reports you need to be looking at all of them every single week. As a matter of fact, that would be completely overwhelming and unnecessary. So which ones do you look at on a weekly basis? Which ones do you look at monthly? What about quarterly? And are there any reports that you review really just once a year? All right, so let's start with weekly, because weekly is the cadence that you really want to get used to. This is really where the rubber meets the road, so to speak, in your business. Can you get in your schedule a cadence of where you're reviewing the right reports on a weekly basis and making sure that everything is taken care of? So what I recommend is on a weekly basis, you are reviewing the cash flow report and that you're paying your bills weekly. Personally, for me, I get that report from my bookkeeper on Monday, and in the evening on Monday or perhaps on Tuesday, I go through the report and I make decisions about what gets paid. I make sure I understand where the money's going out, and if there are any invoices or payments I'm not sure what that's about, I will flag it and say, hey, what is this? Who's this going to? I do that weekly. Once you get used to it, it doesn't take much time. And actually what I'm doing in advance of that is I'm making sure that any paper statements, paper bills, paper checks that we get, which I try to keep to a minimum, we process on the Friday before. So all of that stuff gets processed by scanning it into QuickBooks or taking a picture on my phone, and any actual checks get deposited through the mobile app. And that data then is in QuickBooks so that on Monday, my bookkeeper can pull all that stuff and produce the cash flow report, look at the account balances and tell me how much cash is there, who needs to be paid, and what does that all look like. So that is a weekly review on Mondays, and then all payments go out on Tuesdays. And we keep that schedule tight. I mean, it is a rare occasion when I'm sending out a check or making a payment on a Wednesday, Thursday, or Friday. Very regimented about that, and because I do it weekly, nobody complains that they're not getting paid on time because stuff is going out so frequently. So the cash flow report is weekly. Now, the other thing to look at is your accounts payable and your accounts receivable report. So that is the report that shows you who you owe money to, which if that data is sufficient on the cash flow report, you do not need to look at the accounts receivable or accounts payable report, that's fine. Then you can scratch that. Accounts receivable would be any money people owe you. Keep an eye on that every single week. It can get out of hand if you're in the type of business where you're doing a lot of invoicing. You don't want that to get out of control. So that's weekly. I don't know, 5 to 20 minutes should not take you very long. Oh, finally, I'll say on the cash flow report, in terms of issuing payments, we try to do as much as we can electronically, and then we do a lot of online banking checks as well. So, I mean, once in a great while, I'm actually writing a hand check, but most of the time it's all electronic. All right, so let's look at the monthly cadence. What are you going to look at monthly? Well, on a monthly basis, I want you to look at your P&L summary and detail report. Your profit and loss summary and detail report. Now, if you're just getting into the habit of all this, I would love for you to look at it every other week, actually, until you're comfortable and confident in the trajectory of the business and things are under control. As a matter of fact, if I ever get to a point in my business where things are a little wonky, and it happens all the time, then I'll go to looking at this every other week instead of monthly. But on a monthly basis, you should be looking at a really good solid P&L that's been reconciled by your bookkeeper. And I recommend that that full report come in no later than 5 business days after the end of the month. It's important that you get it closed and completely reconciled so that you're looking at clean and clear data. If you're getting a report like week 2 or week 3 from the preceding month, it's too much time, too much lag in there. Tighten that up and get a full reconciliation within 5 business days of the month. It can be done, I promise you. So I'm looking at the P&L summary and detail report. The summary shows me generally what's going on, and the detail answers a bunch of my questions. And so I'm looking at the summary on my computer, and then I'm looking at rather the detail on my computer, and I printed out the summary. So I like to just see it in that format. And if I have questions, I go to the multi-page detail report, and that is a monthly review. I'm looking at the income, I'm looking at the expenses, I'm looking at cost of sale. Are the margins correct, right? I'm analyzing that, doing the calculation of the profit margin. highlighting things I don't understand, or expenses I'm concerned about, or revenue that's gone down. That's an analysis done on a monthly basis. I don't know, a half an hour maybe per entity, depending on how new it is or how complicated it is. Now, the other thing I want you to review on a monthly basis is the personal P&L. Yeah, you didn't think I forgot about that, did you? The personal P&L, and sit down with your significant other and go through that and say, what do we spend our money on? What were our revenue sources? If you do that monthly, your self-correcting mechanism is probably going to kick in and say, wait a minute, and help you modulate your expenses. If you wait to do that, I don't know, at the end of the year or never, then you never have that opportunity. So looking at your personal P&L on a monthly basis is really going to make a big difference. And similar to the business one, I've got the summary I've printed out, and then I have the detail on my computer screen so I can ask questions, cancel subscriptions, do whatever I need to do on a monthly basis. 20 minutes again, maybe, I don't know. Shouldn't take that much time if you've done the pre-work to get the data really clean and tight. All right, on a quarterly basis, what are we looking at? Quarterly basis, we are looking at the balance sheet. And remember, the balance sheet is giving you a solid look at the income and assets for the business, or rather the assets and liabilities for the business, right? So how much cash is available and how much debt does the business have, and are you managing that well, right? So I'm looking for things like, did our Amex bill get too high that month, and do we have a plan to pay it down? What's the status of any lines of credit? How much cash is in the regular operating account and how much is in the reserve account? And then on a quarterly basis, I'm making a decision about what money needs to be distributed out of the business to me personally. And the balance sheet is a really good way for me to see that. Now, I understand the flow of the business by looking at the P&L every month, but the balance sheet on a quarterly basis allows me to see debt, cash, and how much, if any, we want to distribute out of the business. Quarterly analysis. That way you're not driving yourself crazy and trying to do that weekly or monthly. It's not enough data for you to make a really good decision. All right, and finally, annually. There is actually a report I think it's great to look at least annually, but maybe even a couple times a year. And that here is your net worth report. The net worth report. I say every 6 to 12 months, only because that doesn't generally move a lot in short increments of time, because you need to buy stuff and that stuff needs to appreciate in order for the net worth statement to move or pay down debt, right? So look at that every 6 to 12 months, and the net worth report that we have that's a downloadable allows you to track your progress year to year to year to year. So over a period of 5 or 10 years, you can really see how you've moved the needle. So look, if you follow this schedule, this is not that bad. I mean, we're talking 10 to 20 minutes a week on a weekly basis. I don't know, 30 minutes a month on a monthly basis. 15 minutes to analyze the balance sheet and ask some questions. That hardly takes any time. And then the net worth report, right, is 15, 20 minutes. So cumulatively, you can see as a business owner, it's not a lot of time. The time is spent in making sure you've got a great team assembled in order to produce these reports. And if you're doing it yourself, get out of that as soon as you can, but make sure all your data is tight and everything is accurate. If you follow this, let me tell you, your net worth will be increasing just because of the amount of time and attention you're spending on it.